What's going on, guys? We're going to do another mid-morning kind of update here on the NASDAQ futures. Now, this is about the third day in a row where the open has provided some momentum, but it's extremely choppy. And this is kind of getting people into a little bit of a problem where they're not trusting the price action. They're not really understanding whether they need to be going long, whether they should be sitting short. And what it's causing to happen is missing a lot of opportunity because they're not comfortable with the slower grind, right? Where you kind of push up 2 or 3 candles, then you kind of pull back. Then you push up another 2 or 3 candles, and then you kind of pull back. But if you zoom out and you actually take the chart for what it is, you'll see that the chart is slowly moving up and to the right, which tells you that you should be long. Now, obviously, it's easier to see that in hindsight, but I want to give you guys a couple of, levels, a couple of moving averages that you guys can use so you can maybe identify this a little bit sooner. So if you are finding yourself in that predicament where the open is just very choppy and you feel like you can't really plant your feet that well, do this. Sit out for 20 or 30 minutes. Okay, whether you feel like you're going to miss out on a big move, doesn't matter. Sit out for 20 to 30 minutes. I would probably recommend closer to 30 minutes. Then after 30 minutes, take that opening range, look at the highs and look at the lows, and then correlate that with where we're at in the chart based on supply and demand. So if we were to do that, if we were to take out and confirm the 30-minute opening range low, well, we had a lot of space down to my linear regression down here at 23,400. That would have been a fantastic trade from about 425, 426 down to 400. It's about 20 to 25 points worth of room. That never happened. Now look at the high. The high is above all of your demand. Now, all of my demand, all these moving averages, all this cluster, all this nonsense here is a lot of the reason as to why we're choppy, right? Sometimes when people look at my chart, they say, man, you got too much stuff going on. It's hard to see what's exactly going on. Well, that should be a clear tail sign that if it's messy and there's a lot going on and you see candlesticks trading in and out of all of this mess, you should probably not be putting on trades. Does that make sense? But the average trader out there wants to just go. Market's open. We've got to be taking trades, right? And you'll learn over time, the longer you do this business, that it's not about showing up to the market at open and trying to put on as many trades as possible or thinking that you're going to find a trade each and every single day right at the open. Now you could, but again, with time and experience, you kind of learn like, hey, like, what am I really doing, right? Do I really need to sit here and try to force everything and try to predict the market? Because that's very, very tough to do. Trying to predict the market and what you think is going to happen is going to be next to near impossible. But if you look at this high that we put in here, about 20 minutes off the open or about 10 minutes off the open here, 23,518, all you got to do is tell yourself, we put in a big move up, we put in a big move down. We put in another move up, we put in another big move down. Once you've got this kind of, okay, we're chopping around here, there's nothing really going on, take the low, take the high, and tell yourself, when we break out of this range, which one has more opportunity? And in this particular case, you can see to the upside, we have a lot more opportunity to this channel at 600, where there's not really a lot of mess, right? Than we do coming back down to the downside. This is, 20, 25 points worth of room, but it's not like a tremendous amount of room. Right? I'd rather trade where we've got 100 points worth of room than 20 points worth of room. Does that make sense? And you kind of see here, this was a nice big bear trap where it looks like we're going to sell off. And sure, maybe a scalper could have caught some momentum down here through this little swing low, caught a little bit of a scalp. But realistically, if you were looking for more, you probably got trapped out. So in this particular scenario, realistically waiting for 23,520 to get taken out and then putting yourself long, and then using some of this junk, some of this mess to act as your support, act as your rising support, act as your stop loss would have been much better, because now you can take any level here, the closure, any candle that closes below the 10 or closes below the 20 or closes below the 50 SMA is your max pain stop loss. So as long as price action is not closing below those levels, what do you think you should do? Hold long until you get paid. And when you finally get paid, when we finally start to take out this 520 area, it goes up 10 points here. It goes up another 10 points here, which is 20 points. It goes up another 10 points here, which is 30 points into this high wick. Now, if you're like myself and you're a scalper and you're looking for 10 points or 15 points or 5 points or 20 points, and that's kind of your sweet spot, that's kind of going to make your day where you can just lock it up, walk away, and come back tomorrow, well, then essentially you wait 30 minutes, you make money in the first hour of the day, and you lock it up. If you're the type of trader that wants to catch every single tick to the upside and every single tick to the downside, then more than likely on days like today are days that either A, you get yourself into a lot of trouble, you lose accounts, you blow up, you find yourself stressed, you find yourself not trusting your strategy, or you find yourself in a predicament where you sat back and realistically you didn't trust the price action and you didn't take any trades at all. When realistically you missed out on a fantastic opportunity for a very slow and choppy grind higher type of day, right? Now, I'm not saying that we grinded up 300 points, but all in all, it was a choppier consolidation type of day that you could have made money looking to the long side. Even on this pullback here, a lot of times traders will look at this pullback and they'll say, okay, that's it. Market's going down. We've got to get short here. So they start to short into nothing but demand. You short into support, into support, into support, and then you get bounce. These are opportunities to find the longs coming off of a 50 SMA. Find the longs after a 20 SMA remount. Find the longs, right, in a slow, grindy upwards day. I hope this video helps you guys. If you guys want to join Evolution Traders, that link is down in the description box below. Right now, it's 50% off. It's about $127, I believe, $127 after everything is said and done for a year's worth of access. You get access to the course. You get access to the online community. You get access to my private lessons and videos that are not on YouTube. Everything's inside the community there. Very interactive. That link's in the description. Also, we've got less than a day left on Apex 80% off sale. If you need evaluations, head on down to Apex, use my discount code DAnthony. You're going to save 80% on those evaluations. I'll see all of you guys on the inside.